Today, we are pulling back the curtain on the two emotions that secretly and powerfully control every market, every chart, and pretty much every single trading decision you will ever make: fear and greed.
So let me ask you, what do you think is the single most powerful force in all of trading? Seriously, is it the latest news headline? Is it your perfectly drawn trend line? Or is it something way, way deeper? Here's a hint. The answer isn't on your charts, it's right between your ears. And here they are. Meet the two puppet masters of the market: fear and greed. You know, fear is that little voice that tells you to panic sell right at the bottom. It's the one that convinces you to hold on to a losing trade way too long just hoping for a miracle. Or it makes you hesitate and you miss your perfect entry. And then there's greed. Oh, greed is the engine behind FOMO, that fear of missing out. It's what makes you chase those crazy pumps, over-leverage your account, and basically just throw your entire strategy right out the window.
So here's what we're going to cover. First, we'll get into the psychology of why these two emotions have such a death grip on us. Then we're going to look at how we can actually measure them across the market. After that, we'll dive into some real-world examples of fear and greed completely taking over. And most importantly, we'll wrap up with concrete strategies to help you get your emotions under control. Okay, let's just get right into it. Why are these feelings so ridiculously powerful? Well, it turns out our brains are, how do I put this, basically hardwired from the factory to make us pretty terrible traders. Yeah, check this out. There's this concept called prospect theory, and it is fascinating. It basically says that the emotional pain you feel from losing, say $100, is way, way more intense than the pleasure you get from gaining that same $100. Our brains are literally designed to avoid loss at all costs. And that creates a really dangerous imbalance in how we make decisions.
And that imbalance leads directly to this, the psychological trap that so many of us fall into. You know what I'm talking about. You sell your winning trades way too early just to lock in that tiny little dopamine hit of a profit. But you hold your losers forever, just praying for a comeback, because closing that trade and actually accepting the loss is just too painful to handle. This is the root cause of so many trading accounts blowing up.
Okay, so if we know these really powerful feelings are out there, driving the entire market, is there any way to actually, measure them? Can we turn this big, abstract, emotional climate into something we can actually see and use? Well, believe it or not, the answer is yes.
And this is how. Meet the Fear and Greed Index. I want you to think of this thing like a thermometer for the market's mood. It takes a whole bunch of different data points and crunches them all into one simple number that goes from 0, which is extreme fear, all the way to 100, which is extreme greed. It gives us a beautiful snapshot of whether the market is panicking or getting way too euphoric for its own good. So how do you actually read it? Well, it's pretty straightforward. A really low score, deep down in that fear zone, suggests that investors are way too pessimistic and that assets might be totally oversold. For a contrarian, that could signal a buying opportunity. On the flip side, a super high score, way up in the greed territory, signals euphoria. It suggests the market is overheated and, maybe, just maybe, is due for a pullback. It's a classic tool for betting against the herd.
But this isn't just some magic number pulled out of thin air. The index is built on real, solid data. For the crypto index, for example, it looks at things like volatility. A sudden spike in volatility is a classic sign of a fearful market. It also looks at market volume. Huge buying volume when things are going up, that screams greed. It even pulls in data from social media chatter and Google Trends to get a really complete picture of the crowd psychology.
All right, enough theory. Let's see how this actually plays out in the real world. We're going to look at two pretty dramatic examples of emotional extremes, one in the Bitcoin market and one in the gold market.
Okay, I want you to just imagine waking up and seeing this number on your screen, 9. That is not just fear. That is pure, unadulterated, extreme fear. The market is in an absolute state of panic.
And a reading like that often corresponds with a major market event, like this hypothetical Bitcoin flash crash. In just 60 minutes, the price just falls off a cliff. Leverage gets completely wiped out. This is exactly the kind of moment where weak hands are shaken out, and honestly, fortunes are lost.
And this post from a trader just captures the raw human side of that panic, the shock, the awe. The sheer scale of the loss feels impossible to even comprehend, and you can almost feel the emotion just bleeding through the screen. This is what extreme fear looks and feels like.
All right, now, let's flip the switch completely. From a 9 to a 76, we are deep into greed territory here. This isn't panic anymore. This is a party. Everybody is bullish, and it feels like the price can only go one way, up.
So this score came during a massive gold frenzy. You know the story. There's uncertainty in the world, so everyone rushes into gold, pushing the price absolutely parabolic. It feels like the safest, most obvious trade in the world. And that is exactly the problem.
This post from another trader just hits the nail on the head. It perfectly captures the danger of greed. When an asset feels totally safe, when the story is that strong, and when every single person you know is buying in, that is often the point of maximum financial risk. Greed makes us completely blind to the downside.
So here we are at the most crucial question of all. How do we fight back? How do we build a defense against our own worst impulses? Well, let's open up the playbook for rational, disciplined trading.
Okay, here are 4 rules that are just non-negotiable. First, you have to have a plan. Define your entry, your exit, and your risk before you even think about clicking that buy button. Second, you always use a stop loss. It is your emergency escape hatch. Decide how much you're willing to lose on a trade and stick to it no matter what. Third, set clear profit targets. Know when the trade is over and it's time to take your money off the table. And finally, and this is the big one, discipline. A perfect plan is completely worthless if you don't actually follow it.
And building on that, it's really all about developing a professional mindset. Learn to acknowledge your feelings. Okay, I'm feeling greedy right now, but don't let those feelings drive your actions. Have the patience to just sit on your hands and wait for your perfect setup. Remember, sometimes the best trade is no trade at all. Your number one job isn't to make money. It's to protect the capital you already have. And you have to treat every single trade, win or lose, as a lesson.
So what's the ultimate takeaway from all of this? The charts, the news, the fancy indicators. At the end of the day, a lot of that is just noise. The real battle, the one that truly decides if you win or lose in the long run, is the one you fight every single day against the person looking back at you in the mirror.
And that leads me to my final question for you. I want you to really think about your own trading journey for a second. What was that one moment where fear or greed completely took over and maybe cost you? Be honest. Share that story in the comments below. I think we can all learn a ton from each other's battles. Thanks for tuning in.